Hello everybody, welcome back. We're going to have a quick look at Bitcoin, obviously, work out what's next, and also going to assess the damage on the old dollar here, and this is the amazing thing, I always say, that TA is all fine, and for the most part it is, but then and the thing is, this wasn't even out of the blue. Like, everybody expected an inflation report of at least 6% or maybe a little higher, but we got one of 7%. And then, it's almost like suddenly out of the blue says, oh, the dollar's strong, the chart is strong, everything's good, the tapering's already going forward, they're speeding it up, as they said, and then suddenly, dollar weak, 7%, and then suddenly the dollar dies again, and it's coming down to that level of major area of support, to be honest with you. So, in all fairness, the fundamentals haven't changed, and this is something we should always recognise on any chart, really. We can use Bitcoin as a really good example of this. The fundamentals haven't changed. So when we were saying, look, we might get this big dip here, and we were saying that because of it basically feeling like a carbon copy event of this one. With the virus that came out recently, the new addition to the old Megatron collection of viruses, and then the original one, which did this to the market. So this happened before, right? And we were like, okay. So suddenly it was almost like we were reliving the past, and I said, oh god, here we go again. Let's just be careful. I mean, it might happen, and if it does happen, it's technically a black swan. Down we go, all in one go. Nothing really to do with the chart, but to do with outside forces that govern price action, really. Panic sellers, really. And again, when this happened, or before it happened, I said if it comes down, it'll be a buying opportunity. When we were in here, I said we're going to probably spend a fair bit of time in this range. From the top round here to the bottom round here. That's why these lines are drawn in here. But what I'm trying to say is that the fundamentals of Bitcoin haven't changed. Neither have the fundamentals of the dollar. They've not changed either. It's just a reaction, or an overreaction to events that have unfolded today. And so the dollar has dropped off an absolute cliff here, as it would appear that a 7% inflation, which is pretty big, that's the biggest that's the biggest report that the CPI is, as far as I'm concerned, it outdates. Yeah, I think it does. I think they were saying it's the highest it's been since '82. So it outdates the dollar index here. The Dixie doesn't go back that far. But yeah, I mean, it's no real surprise that inflation's high despite the tapering. But remember, the tapering is already going on. This is what's priced in this rally, and guess what? The tapering will likely continue, probably at the same rate. To be honest with you, like I say, there's no difference in what's happened today than what happened yesterday or the day before. Now, we'll see in the next few days, weeks, so on and so on, if they decide to ramp up tapering even more. But I don't think they will. The reason I say that is because they've already decided to speed it up. And just like a moving average, for instance, these reports are lagging indicators, aren't they? So what they've said today is information based on previous performance, and it's no different to how it was yesterday, the week before that. It's just that now it's solidified with a 7%. So Bitcoin and everything really having a bit of an update as a result of the dollar's demise. But we would be silly to think that this is going to drop all the way down indefinitely. But let's keep our eyes on the prize. I mean, let's face it, a chart is a chart. We'll see what happens after this. But just as the fundamentals haven't changed on the dollar, they haven't changed on Bitcoin. So I do expect this to carry back up again. But just like any chart, it's not going to do it immediately, is it? I mean, the chart, just like any of these charts, when we talk about charts breaking down through, we'll call it a black swan event or some kind of news event. I mean, the chart technically is broken, and if anybody wants to trade a chart like this, it will need a bit of time to balance out again. To imagine that this would just simply recover straight away is unrealistic, unless of course the Fed come out and go, we're going to speed up tapering even more. Like, it's not going to happen. They're on a balancing act at the moment, and they're doing what they can do, and I think what they're doing already is basically all they should do. it should slow down the inflation to an extent, and it's going to take time. It's not going to, they have to accept that it's going to take time to bring the inflation down. It's not something that they're going to turn on. They're not just going to press a button and resolve it tomorrow. Just like when they turned the money printers on back in over here. This is where the money printers went on. It took a fair bit of time for them to decide that it was time to begin tapering. Best part of a year. So fundamentals haven't changed. I would say that this chart over here is technically broken, at least on the short-term time frames, maybe for a week or so. So as bad as it might look in the short term for the dollar, I think it will inevitably creep back up again because the fundamentals have not changed. This is just a panic and a reaction to the 7%. So thinking of reactions, now we can talk about Bitcoin. Look, you can see the inverse is happening, and again, it's going to be the same across the board. In fact, I've not looked at traditional markets, but we'll just have a quick look just for fun. Let's have a look at the old Nasdaq. Let's have a quick peep at you. Go on, we'll have a look at you. So 4-hourly chart, yeah. So it's no different to a Bitcoin chart, isn't it? Really, it's exactly the same. Get back to the Dixie. So I'm going to do the live stream in half an hour, so I need everything ready for that. But yeah, it's no different to Bitcoin. It's reacting positively to a deflating dollar, a dollar that's going down. Basically, that's the key here. So let's focus on this Bitcoin chart. What do we see on the daily? Well, we're toying with the idea of breaking outside of this descending channel. It's not a massive breakout at the moment, and again, it's not actually closed this candle body on the daily. Let's go to the 4-hourly. How does that look? The 4-hourly is in a cloud, so a bit of a no trade zone. So you've got to have balls of steel to enter a trade here, to be honest with you. But relationship to moving averages are fine. But if we think about this uptrend since we found our low over here, there's not really been a great deal of significance for the moving averages. It's too early to say, but if we were to come back down again, I'd imagine that the 10 exponential catches it, hopefully, which would mean that I wouldn't want to see us break down much further than that, which is basically on the descending trend line, which was previous resistance, and hopefully is now flipped to support. Things are looking quite positive, but it is too early to say on this one. A breakdown, I don't want to call it a breakdown. A pull back to the center of the Bollinger Band on the 4-hourly currently would bring us up to about 42,250. So an uptrend is still definitely in play. To expect an enormous sell-off on this, I think is unrealistic. I think a continuation, at least to a small extent, up towards the mid-range of the accumulation, which we've been talking about, and that'd be about 46,000 around here, 46,500. That'd be the obvious place for a major rejection. Maybe just a front run of that, where these 21 exponential and 20 moving average are. So between 45,005 and 46,500. So and obviously you can see that the amount of times we tapped this as support before it broke down would give this relevance for a major resistance coming back up. So I think given what I've said about the dollar breaking down, probably going to get a bit of a relief rally from that, at least, if anything, and then it'll find a new range. Essentially the chart is broken on the short term until it can find a new rhythm. That'll give crypto, Bitcoin and traditional markets a little bit of turbulence, definitely, but also continued upside in the short term. Bitcoin and crypto specifically will get a little bit dodgy if we start to approach these levels. All around these levels would be worth thinking about, at least trying to take some profit, because in the grand scheme of things, currently we are still in a downtrend. So let's face it, we are still in a downtrend. There's a lot of resistance above us, so we have to respect the fact that it is resistance and expect it to be resistance. And if it is resistance, then this is what could happen. We could come up to here. We could get rejected from there. We could find lower lows still and break down, or even more, I suppose you can call it a bull trap, come all the way up to the top range, 49,500, and then give a false sense of security and then carry on down. At the end of the day, we're not out of the woods at all. There are glimmers of hope, but let's like I say, let's not be fooled. into thinking that this is a full-on reversal. It could be. I expect the bottom to be here. Definitely expect the bottom to be here. That's what I've been saying before we came down into this area. I said, look, we get this wick. When we're in here, I said this is going to be the range. I would expect. Oh no, this would be the range here, and I still expect that to be the case. But let's recognise that there are outside forces that will have an impact, as they already have. Like this one, and now the tapering may get speeded up. I doubt it will, but it's likely to remain the same. But in the short term, I think it's going to be good in the short term. But remember, this is a downtrend, isn't it? We are still downtrending. There's no real trend line here, to be honest with you. There's nothing really to measure out. But let's just, you don't even need me to do that. You can see highs, lows, lower highs, or lower lows, lower highs, lower lows. So let's expect on the first pass that we're going to continue with the downtrend, and that'll be fine, as we remain in this accumulation zone. But yeah, let's not go crazy. Let's absolutely not go crazy. Let's be on the back foot, waiting for the rejection at the first opportunity, which the first major opportunity is going to be between 45 and 46-ish area. Again, representing these kind of zones here, 45,500, which were where a lot of these wicks came down to. At best 46,500, which is where these candles were closing at. So let's put our sensible hats on. Let's not go crazy. Let's recognise what's happened today, which is still good. Like I say, charts broken on the Dixie, charts breaking out on crypto. So all of that is good for our technical basis. But then, just as we did before, stand outside of the charts and recognise that there are some things that do hold significance that can't really be accounted for, particularly on this chart or any chart. Keep your ear to the ground, basically. Right, I'm going to leave it with you there, but thank you for watching. I hope you have a nice day. If you want to join the Patreon, we're doing a live stream later, but we do them twice a week. Links in the description. Otherwise, just join the Telegram. That's free. And yeah, have a nice evening. Take it easy.